Welcome to Larkin-Gowan Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hi everyone, this is Andrew from Larkin-Gowan. I'm joined today by Louise, one of my fellow partners, to host today's podcast. We had a lunch and learn yesterday, which was very well attended. It was on the subject of contract changes, so we thought we'd have a recap today and share everything with you. So good afternoon, Louise.
Hi Andrew, how are you?
Yes, great, thank you. Enjoying the sunshine. How are you?
Yeah, I'm really good. We thought it'd be useful because we know not everyone can attend our lunch and learns. So I think just having a quick refresh of what we spoke about, talk through the main points, just to get out for those, pique everyone's interest. So hopefully they'll come and join our next one.
Excellent.
So what did we talk about yesterday? Contract changes. So bearing in mind, the new financial year starts the 1st of April. We got our contract changes on the 28th of March.
Timing is everything, isn't it?
I know. And we actually still don't have the kind of fundamental contract guidance from NHS England, do we?
No, the contract pages still say guidance to follow, which is really helpful. It happens every year. Incredibly frustrating, but at least we do have the statement of financial entitlements to be able to give you some guidance today.
Yeah. So we'll just really briefly run through what those changes look like. And because every practice wants to know what the impact is on them, we thought we would just put some numbers down of what an average practice might look like, bearing in mind there's no such thing as an average practice these days. But just maybe to put a little bit of mind at rest potentially with what the numbers are coming out like. So let's kind of dig into it then. First off is our global sum. So obviously this is the core funding that those practices receive. And I should probably say that this is mainly for GMS contracts. So those on a PMS contract, you still be getting the same uplifts, monetary value, but you might be starting off from a different point. And a lot of these changes are actually kind of just rolled up into the overall baseline, depending on what's been agreed in your PMS contract. So looking at the global sum, we got around an 8% uplift from £112.50 through to £121.79. So, Andrew, it's like £9.29. Brilliant. That's quite a nice uplift.
Yeah, really good. The only downside is, of course, you've got to factor in the out-of-hours opt-out cost, which is 4.75% of global sum. So I think that works out to be £8.85, and that should be the case for both PMS and GMS contracts.
And I guess the slight silver lining is that that percentage has stayed the same now for quite a few years, hasn't it?
It has, and it still represents a really good bargain. It was introduced in 2004 when we had the new contract coming in. And before that, all GP practices and GPs themselves had to provide out-of-hours services as part of their contract. The negotiators got the numbers somewhat wrong, and the deduction for out-of-hours service didn't touch the cost of providing that service. So from general practice perspective, that was a real positive of the new contract 21 years ago.
I love how we always call it the new contracts as well.
I know. Time flies as well, doesn't it?
It really does. I'm sure I was a mere babe 21 years ago.
Well, you don't have to rub it in, to be fair.
I definitely wasn't. Okay, so 8% uplift into your global sum, but as Andrew said, we've got that opt-out for the out-of-hours just to factor in as well. If we move through to some enhanced services, childhood immunisations, so there was a £2 uplift to the item of service fee. So now at £12.06, but this only kind of applies to a few of the vaccinims, doesn't it?
It does, and it's so frustrating the fact that it was £10.06 for, I think, the best part of 7 years. So £2, yes, it's better, but it's still not appropriate for the service delivered. But hey ho, that's me on my soapbox.
Yeah, and obviously all of the other enhanced service immunisations are still at the £10 and 6p. So yes, it's gone up by 20%, but you've got 7 years worth of inflation plus static, no inflationary uplifts for all of those others. So we probably are still losing out, I suspect.
I would agree.
We spoke how great the global sum uplift was at £9.29. However, they don't give you without taking away somewhere else. So a lot of that investment in the global sum, around 100 million, we know has come from the QOF. So our QOF points have been reduced from 635 down to 564 points. But the QOF point value has increased. So it was £220. It's now £225. Surely that's more good news.
Oh, I'm going to have to get on my soapbox again, I'm afraid. So they do this
You're going
every
to wear your
year.
soapbox out.
I really am, and I get frustrated with this every single year. So the pound per quaff point goes up every single year, but what they tend to keep under wraps is the fact that the average practice list size also goes up. So I think the numbers this year, the £5 extra per point is about 2.21%. The exact same 2.21% is then added to the national average list size. So what that means is if your practice list size is not keeping pace with the national changes, then unfortunately it means that you'll get slightly less under QOF. The opposite applies. If your list size is growing in excess of the national average, then you'll get slightly more. But it's, yeah, you know my feelings on it, Louise. I get so frustrated with the fact that it looks like good news, but really it's just keeping the status quo.
And it's just so hard to know how, as a practice, you are really going to benefit from these, because where money comes out of QOF and into global sum, you're also going to get winners and losers when you look at your disease prevalence versus your weighting. Because if you've got a practice that does quite well on its QOF, has quite high prevalence, but quite a low weighting, because more of that money is now based on your weighted patients instead of into the QOF, you could lose out. Or if you're the other way around, you don't do particularly well on your QOF, but you've got quite high weighting, you would benefit. So it's just a minefield for practices, isn't it, to really know what the impact is?
It really is, and to be told of these changes literally 3 days before the new values come in, it doesn't give you any chance of business to prepare. We'll talk in a bit about employers' national insurance and increased staff costs, but again, it's just no way to be able to run a business effectively. The only good news coming out of QOF moving into global sum or your PMS contract is the fact that you'll get slightly more on a monthly basis rather than waiting to the end of the year when the QOF achievement money comes through. So from a cash flow perspective, there is a positive there.
Yeah, like you say, take the positives where you can. I guess perhaps some actual good news that came through the contract was the reimbursement allowances for maternity and sickness, or also paternity and adoption leave. But the maternity and sickness tends to be the two main ones. Now, this is a really important allowance, I think, that practices can claim. And actually, these have been in since, I think, 2017-ish. And I do still come across practices that didn't know about them. Perhaps just never needed them before. So as a very quick reminder, if you've got a GP, so salaried or partner, who goes on maternity leave, goes on sick leave, there is an amount that as a practice you can claim from NHS England. So for maternity allowance, it kicks in from day one, but for the first 2 weeks, it's a slightly reduced reimbursement at £1,418. Now, previously it was 1,211, so that's a nice 17% uplift. Again, they have been set at the same level for quite a long time, but definitely a welcome improvement. After the first 2 weeks, we increase up to £2,151, up from the previous amount of £1,856. And that's for a 6-month period. For our sickness allowance, it goes straight in at the higher amount of the 2,151, but you can only claim it after the 2 weeks, first 2 weeks has elapsed. I mean, what are the things that practices need to bear in mind? Can anyone claim this? Could it be, existing staff covering sessions? Do they have to get external locums in?
Yeah, so the partners themselves, if they're doing the extra sessions to backfill, then practice can make a claim for that one. I think the one thing which is always timely to look at is your partnership agreement. Just make sure that the clauses are fit for purpose. Also consider the insurance that you have in place with an external provider. So I would imagine that most practices, certainly the ones that we look after, have locum insurance policies. And just make sure that you're not paying for something that perhaps you don't need, because the cost of insurance, just like everything else, is going up. Premiums continue to increase. It's great to have. It may be something you never need to call upon, but just make sure you're comfortable with the level, bearing in mind the reimbursement that you can now get through your GMS or PMS contract.
And you mentioned that about the partnership agreement, and I think what you're kind of referring to is that if the costs of the locums outweigh the reimbursements that you're getting, who's picking those costs up? Is it the partnership? Is it the GP that's off? Is it a combination of both? I think the partnership agreement, we've spoken about it in other podcasts, is just so important. I guess I would also add, you can have internal cover, but they can't already work 8 sessions. So it has to be a sort of part-time that you can claim for. You can't sort of, do an extra 2 sessions up to 10 and claim for that. Has to be less than 8 sessions. And it's not prorated. So if the GP that goes off only works 4 or 6, there's no adjustment. That is just what they get, but it's obviously a capped ceiling amount. With the other enhanced services, we do have this advice and guidance referral enhanced service coming through, which, I think the primary purpose is to bridge that gap between secondary and primary care. So it's £20 per referral. Some of the practice managers on our Lunch and Learn kindly shared some little bits of information. So in some ICBs, it will be capped, but they just don't know how they're going to work it out, basically. So yes, we know it's £20 per referral, but we don't really know much more than that, ultimately.
No, and it's a good chance to give a quick plug to our Lunch and Learn. So it's a real helpful session, an hour long, lots of people attending, lots of different views, lots of intel shared, and it's a great thing to participate in. So if you are listening to this and you haven't joined us before, please join us on our next one.
Yeah, if they can sign up to the mailing list, you'll get notified of when the next one will be. I think we're going to run them every 8 weeks. But in the interim, we are also doing GP Lunch and Learn. So we run one specifically for practice managers, one specifically for GPs. And so they will obviously alternate every 4 weeks. So each one is every 8 weeks. And yeah, I think we brought them in because we wanted a way to get sort of real-time information out to our practices, and just so that they've got other people they can ask questions at, not only us, because we also learn from them a lot as well. So definitely been really valuable kicking those off.
100% agree. And the other point to make is, whilst we'd love to record them and share them on our social media, sadly we can't because of GDPR rules. So if you want to participate, if you want to come and join us, then it is join us on the day.
Exclusive club.
Absolutely. Best club.
Okay, so we've covered off the global sum, maternity allowance, childhood IMs, QOF, PCNs. Of course, there's going to be changes to the PCN income. They are here to stay. We don't know in what shape or form they will be, but they will certainly be around for a while yet. So core funding is one of the key elements of the PCN monies. And we saw last year some changes whereby the core funding was combined with leadership and management, and also the clinical director funding. And now our core funding is split into kind of 2 different elements, both core funding, but calculated slightly differently. So the main part is now paid at £2.26, a 2% uplift from £2.21, and that is based on actual patient numbers.
And that's per annum, isn't it, Louise?
Yes, sorry, £2.26 per year per actual patient. We have our kind of top-up amount, which is 73p, which is up 5% from 69p last year. But this is on this other term, which is adjusted patients. So is that just a weighted patient number, or is it something slightly different again?
I think you know the answer to that one. It's slightly different.
It is slightly different. I don't actually know how they calculate it. So it starts with the weighted, and they do some more jiggery pokery to it to come back with an adjusted list size. Maybe one day I'll actually have some time to find out what it is.
Okay, well, when you do find out, can you let me know, please?
I'll let you know, and I'll let all our listeners know as well.
Excellent.
You can get all of that information in terms of actual and adjusted list sizes online. There is some really helpful spreadsheets published nowadays, which is good. Enhanced access, so a 10% uplift to our enhanced access fee this year, now at £8.42. These are also slightly rounded because they do really annoyingly 3 decimal places for some reason. And I don't know why they do that. So £8.42. It's just the NHS all over, isn't it? Up from £7.67 last year. And EA is also on your adjusted patient numbers. 9% uplift to our care homes. Used to be a lovely £10 per month per bed. Now it's not. So we're now at £130 per bed per year. So 9% uplift. We then have, surprisingly or not, I'm not sure, an actual slight decrease to our capacity and access monies. So again, this is in 2 elements. We have the support, which is your monthly amount you get. So that's at £3.20. So it's only a 1% reduction, but a reduction nonetheless. So it's about a 4 pence drop per patient per year. And then our improvement payment is also a 1% reduction at £1.37. So it's like a 2p. I mean, just keep it the same, if anything. But hey ho, there we go. IIF, that is a £2 per point reduction. So now at £198 per point. But on the same number of points at 58. So similar to the QOF, it's an achievement-based income stream, but not much really to sing about on that one. ARRS, so our Additional Roles Reimbursement Scheme. Only a 2% uplift into the funding. So we were at a sort of flat £26. We're now at £26.63 on a weighted patient basis. Andrew, we've obviously had a slight increase in the monetary value, but there's been increased flexibilities within the actual staff roles as well.
Yeah, a couple of positive changes. So salary GPs came into the ARRS scheme partway through last year. It was based on certain criteria. Rather than being an individual funding now, it's all part of the overall pot, which makes it a little bit easier to fund, or to rather claim under. And nurses have also been added into the equation as well. So that's some positive news.
And you mentioned the conditions. So I think with the GPs, they have to have been sort of qualified within the last 2 years. So that still stands. And with your nurses, the condition is that they can't have been employed by your practice or by any other of your PCN member practices within the last 12 months.
And they make mention of substantive, don't they?
Yes, they do. And I think ultimately what they want is the A in ARRS is additional. They want increased staff numbers coming into general practice, not just repurposing the staff you've already got to effectively get more funding. So it's really to grow the workforce. But they one of the practice managers made a very good point on our Lunch and Learn yesterday that, they'd employ all of them if they had space.
Yeah, there's not a huge amount in surgery premises, is there? There's no national pot of money to speak of to help with that. And demand is just continuing to grow. So how you accommodate these individuals within your space is a major challenge.
Yeah. And I think just a cautionary tale with the ARRS, thinking about the increased flexibilities of having GPs, practices might be thinking, oh, well, I'd rather have GPs than maybe a pharmacy tech or a clinical pharmacist, etc. You've employed these people. They've got employment rights. So if you're wanting to change the mix, you'd have to go through redundancies and things like that. And it's not easy to do that. So I think it's well and good having this increased flexibility, but it's not potentially going to be that easy for practices to just switch up the mix of staff that they've got. So I think there's just a a cautionary tale there. And I think thinking about ours, it might bring us nicely on to thinking about the employers' national insurance, which you mentioned, an increase in national living wage. So hopefully everyone is already aware, because we're in April, it hits this month. Employers' national insurance is now at 15%, up from 13.8%, which came out obviously in the budget last year. And they said, oh, don't worry, we're going to also increase the employment allowance. So, the amount you can claim back as an employer has gone up. Oh, brilliant news. Well, yeah, except NHS practices can't get the employment allowance. So that 15% rise, that rise to 15% is a true hit on practice profits ultimately. What we've also seen is the limit at which that kicks in drop down from about 9,100 to 5,000. So unfortunately for GP practices, it's a double whammy, isn't it?
It is. It's going to pull more of your workforce into national insurance territory, which ultimately is a cost which is borne by the partners. So you're then looking at how the practice is funded. So, Louise, we talked about global sum increase. There is a percentage uplift deemed to be towards an increase in staff costs, isn't there?
Yeah, so within that 8% uplift, they say around 2.8% of that is intended to cover your increased staff costs. So that would be, national insurance rises, national living wage rises, and general pay rises within staff. And you think, brilliant, if I give, I'll work out a 2.8% pay rise, I'll be okay because it will cover it. But they're quite sneaky, and it might not be okay for a couple of reasons. First off, if you give everyone a 2.8% pay rise, you have got to then get the on costs. So your 15% national insurance, your 14.38% pension contributions. So the 2.8% to staff is actually going to cost you another 29% on top of that. So you have to factor that in firstly when you're costing out your pay rises. But otherwise, when they look at the contract, when the contract came in, they said that around 50% of that funding is spent on staff. And maybe back in 2004, it was. Nowadays, definitely not. There was a big piece on this, I think, last year when the uplift was sort of the 6%. And what the impact would look like on practices. And we run some calculations for a lot of ours, and a lot of their staff costs were about 60, 70%. So if you are spending more than 50% of your income, and when we talk about income, we're talking about your enhanced services, your global sum, and your QOF. If it's more than 50%, then the 2.8% won't cover it. So you've got to think about the on costs. You've got to think about the actual percentage of staff costs versus your income. So lots of things to really think about. And I think coming back to the ARRS staff, if you're giving them pay rises, what does your budget allow? How much, do you have left in the pot? If there isn't enough, where does that come from? We haven't seen much of a rise in core funding, 2%. So that might not be enough to cover it. So do we have to withhold some capacity and access funding? Do we have to withhold some IF funding? Or do the practices actually have to cover it as well? So many different angles that, PCNs and practices have to think about now. So we put some numbers down on paper and we said, okay, we'll look at an average practice. Now this is very simplified, and I guess you could take it with a bit of a pinch of salt, but just to put some context, I guess, behind the figures. Now, our average practice that we worked on had a list size of 10,184 patients, and they had
very specific,
absolutely, but they had no waiting. So every patient was just, bog standard, 1-for-1. So all our patient numbers, all our payments per patient was on the 10,184. So that's the first variable. I don't know any practice that doesn't have a waiting, but for ease, that's how we've done it. We also assumed that our staff costs in 2024-25 matched our global sum income. So just to give us a base. And we then gave everyone a 2.8% uplift. And we also allowed for a £40,000 increase in the minimum wage and the employer's national insurance. So we costed it all through. And it was going to cost us an extra £40,000 just in the minimum wage and in the employer's NI. The 2.8% uplift cost us about an extra £130,000. So we worked through all of the numbers. And also in this scenario, our practice gets all of the money from the PCN other than IIF, and we don't have any Rs staff. So we don't get any Rs funding, and we haven't had any IIF funding. Everything else has come all the way through. Nothing's held in the PCN. So for us, the bottom line, factoring in a staff increase, we were still £18,000 better off. But what other things would we have to think about in that respect?
So whilst that just purely looks at increase in income, which we do know about, we know what the staff cost uplift will look like, but what about all of the other increases in costs as well? So pretty much every business that you deal with is also having to contend with national living and minimum wage uplifts, the employer's national insurance uplift, and also just general inflation, which probably 3-4% that they are factoring in for the year. So it's inevitable that all of your suppliers will be putting their prices up to try and maintain their own profitability. So factor all of those in. It's a tough year ahead again for general practice.
Yeah, so we may not see that 18,000 actually convert into bottom line profits, because you'll have your drugs, especially with dispensing practices. It will depend what you get from your PCN. You might not get everything out of your PCN. It will depend on if you've got our staff. It will depend on your staffing mix. Do you use a lot of locums, lots of salarieds, or are you more partner heavy? Do you use a lot of nurses rather than salarieds? So it's there's so many different variables, but just like I say, to kind of put some context, I guess, behind the numbers. I guess my biggest piece of advice, and I think this we've spoken about this to practices so much nowadays, is to just pull up a budget. Do you think?
Yeah, definitely. So I think most practices now have moved on to a cloud accounting software, so one of Sage, Xero, or QuickBooks. You've got to make use of that functionality, make sure that you've got budgets in place, review them ideally monthly against actual figures, look at what your expected profits are, look at where you can improve profits, budget for contingencies, and just have a real good idea of direction of travel. It is difficult when income is confirmed so late in the day, but you've now got the ability to do that budgeting, that cash flow modelling, and really understand direction of travel, because the partners will want to know what their profit share is likely to be, whether the drawings are sustainable, budgeting for tax, budgeting for pension contributions. Team will want to know what it looks like from a staff pay perspective. It's just so important. So speak to your accountant, make sure that you get the appropriate advice, and by all means contact us if we can be a further help in that matter.
Yeah. And actually, one point we haven't mentioned, we said about the 2.8% uplift. We haven't had the DDRB recommendations for pay rises as of yet, so the Doctors and Dentists Pay Review Body. If they publish their report and their recommended pay rise is more than 2.8%, NHS England have said they will honour that and backdate any increased funding through to April 25. Some practices, therefore, may do a kind of on-account pay review, pay rise, see what happens, or they may just wait until they know for definite and have costed it out. So, and you can do that. There's no obligation for practices to do the 2.8%, is there? It's completely
no. That
discretion.
was one of the questions that came up yesterday, wasn't it? We understand that the contract uplift indicates that staff should have a 2.8% increase, and that's not just salary GPs, that's everyone employed within the business. Clearly, you've got to consider national living and minimum wage people separately. But the question was, do we have to physically give them 2.8%? And the answer to that is, well, no. but you've got to bear in mind the perhaps competition from other local practices if they're prepared to give it and you're not. Doesn't mean you're at risk of losing some of your staff. That could be a good thing, it could be a bad thing. But also the cost of living for those individuals as well. The cost of living now, as everyone knows, it's tough out there. So you probably have got some staff that you employ who are on a fairly minimal wage, and to not give them a pay rise is very difficult. And it's so hard because you're trying to run a business and make profits for the partners, for yourselves, but at the same time you are responsible for basically the mortgages, the families of all those people that you employ. So we know it from our own perspective. It's very difficult and it can get very emotive. You want to look after people, but at the same time you are running a business. So it's quite stressful. It causes us a lot of concern, and you can only do your best.
Yeah, absolutely. So I think the final point really just to say about all of this, this is an update to the contract. We are still expecting a kind of contract overhaul. The government have committed to doing that in their term. When that will be, we don't know. So that's a kind of watch this space, I think, isn't it?
Yeah, I think so. So my wish is that we see a new contract from next April. Personal view, I would rather we didn't have primary care networks and all of the funding just went to each individual practice so you can manage your finances so much better. The model hasn't been broken for decades. I still don't believe it's broken. It just needs the appropriate support and funding in place. So we will see. Sadly, I think primary care networks are here pretty much indefinitely. It's a direction of travel, working at scale. My fear is perhaps it then invites private providers into the marketplace. We've seen in the past they've tried, but they can't make enough money to satisfy the needs of the shareholders. And I'd love to have it where we went back to historic models where practices were in control effectively of their own destiny. But we shall see.
We shall see. So I think, there is positives. This is better than we have seen in recent years. So I think, let's end on a nice positive note. But yeah, still lots to think about for general practices. It's a lot to navigate. And I think we've said it before, surround yourself with a good network of people who can really help you with that. So I think that probably covers everything that we wanted to talk about. As always, lots to unpick, lots to unpack, lots to get your head around as a practice. I think if there's anything that's kind of piqued your interest, please do reach out. We're always happy to come and talk to you, talk to your partners on how we might be able to help. Links for the information are in the show notes. So please do go take a look and sign up to our mailing list so that you don't miss our next Lunch and Learn. But otherwise, I think that's everything. So thank you very much for listening. Thank you, Andrew, for joining me as always. And I hope everyone has a great day.
Yeah, thank you, Louise. And I look forward to the next one.
Thank you for joining us for Larkin Gowan Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larkin-gowan.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.